What happened to expectations for significant interest rate cuts in the UK this year? Good morning and welcome to Morning Markets. At the beginning of this year, investors expected UK interest rates to be cut from 5.25% to 3.5%. If the Bank of England leave interest rates on hold, as is widely expected next week at 4.75%, that will be significantly less cuts than had been expected at the beginning of the year. So what happened? Economists' growth and inflation forecasts have fallen for this year and risen a bit for next year, so I don't think the answer lies there. Perhaps investors got a bit carried away at the beginning of this year, applying old rules of thumb, looking at previous cycles of interest rates, and this cycle has been anything but normal. In addition, the Bank of England has been understandably cautious. The scale and the persistence of the inflation shock in 2021 and into 2022, and the Bank of England's slow initial response to that inflation shock has meant that they've erred on the side of cutting interest rates only gradually. The budget has also pushed up the Bank of England's near-term estimates for growth and inflation, so lessened the need for significant interest rate cuts. What are the prospects for UK interest rates next year? Governor Bailey recently spoke about 4 interest rate cuts to 3.75% next year. That would be welcome for mortgage holders, but their monthly payments are still likely to be significantly higher than they were pre the pandemic. Will we ever see sub 1% interest rates again? To give some international context, in the US the economy is strong and there's a prospect of significant corporate tax cuts, so the need for significant interest rate cuts there is perhaps lessened. In Europe, on the other hand, the economy is quite weak and interest rates are expected to be cut to 1.5%. The Swiss National Bank has recently spoken about negative interest rates not being excluded from their toolbox. The UK probably sits somewhere in between. The budget has pushed up growth and inflation estimates in the near term, so the need for significant interest rate cuts is probably less than in Europe, but equally the growth is not as strong as in the US. Overall, these varying market and economic outcomes highlight the need for portfolio diversification. Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.